Keeping a stash of cash is always seen as handy. U.S. restaurant chain Chipotle had $500 million of it and learned that maybe it's best to keep it under the mattress. A Wall Street bank downgraded its stock when the company raised its employees' wages. The bank's argument was that the company needs to save on labor costs because it's been struggling to boost its profit. Keeping cash on hand seems like a trend, even among big companies seeing a bumper year for earnings. According to financial data company FactSet, listed companies around the world are now the most profitable they've ever been. The company's World Earnings Per Share Index collects data from more than 20,000 companies. It shows that their average earnings are now at a record high. They've jumped 19% in the past year. In more good news for business, President Donald Trump and his fellow Republicans are working to slash corporate taxes. But at any rate, investor confidence is expected to rise. The tax overhaul cleared one hurdle last week, when the Senate voted to approve it.
The yeas are 51, and the nays are 49. The Tax Cuts and Jobs Act, as amended, is passed.
Applause on the Senate floor, but the opposite reaction from big companies. They're crying foul over a surprise decision to keep the Corporate Alternative Minimum Tax system in place. The Alternative Minimum Tax, or AMT, was created to prevent companies from abusing tax breaks so much that they avoid paying any tax at all. Businesses calculate the amount of tax they need to pay under the normal system and under the AMT, and they pay the higher amount. The current system puts AMT at 20%, which businesses rarely use, since the corporate tax rate is now 35%. But Republicans are trying to drop the tax rate to 20%. If the AMT stays in place, companies could lose virtually all their tax credits for research and development. According to data compiled by the Wall Street Journal, Apple benefits the most from these tax credits, saving more than $670 million in fiscal year 2017 for R&D. But at the same time, the tech giant also holds the largest pool of cash overseas. And Trump's tax reform plan could force Apple and its counterparts to bring that money back home. But there could be hope yet for companies looking to keep their tax breaks. The Senate bill has put it on a collision course with the House of Representatives, which has repealed the AMT in its tax plan. Both chambers have pledged to have their tax plans in sync before Christmas. A failure could dampen the chances of a year-end rally. Laila Humaira, TRT World.
So let's bring in our editor-at-large, Craig Kapitas, who's in Paris. Craig, so companies around the world are in rude health, we've established that, and despite headline unemployment levels being at multi-year lows in most places, wages are still not moving. Why is that?
Because companies are not following the instruction manual. It's called The Wealth of Nations by Adam Smith, and he warns about this. He says in the book, profit is always highest in the countries which are going fastest to ruin. The government of an exclusive company of merchants is perhaps the worst of all governments for any country whatever. And that warning is not being heeded in Washington.
Craig, so what needs to be done then to break this inherent conflict that exists between the interests of companies and their shareholders versus the interests of workers? I mean, communism tried to solve this and failed, right?
Well, let's go back to the instruction manual, Wealth of Nations. The proposal of any new law or regulation of commerce which comes from merchants and manufacturers should always be listened to with great precaution and ought never to be adopted till after having been long and carefully examined with the most suspicious attention. Get rid of the lobbyists. Get rid of the special interests. Don't write tax codes in pencil overnight. The rule book is not being followed.
Craig, we've been talking about this surge in corporate earnings, and that is fueling what is now one of the longest stock market rallies we've seen. But what's the betting on this continuing into next year?
Well, look, as our apologies to our viewers, I'm sticking with the instruction manual. Adam Smith said in Wealth of Nations that what the money we're seeing here are not profits. He called them pernicious gains, which had nothing to do with profits, were to be avoided at all costs. And the reason why, he said, quote, masters of business are always and everywhere in a sort of tacit but constant and uniform combination not to raise the wages of labor. So they're not going to do this. Wall Street is not going to do this. What you're seeing here are, yes, we call them profits. Adam Smith would have called them pernicious gains, and those aren't good.
Interestingly, France, where you are, has long had tough safeguards for workers at the expense of corporations. And now, under Emmanuel Macron, those are being reversed to boost competitiveness. Could France live to regret this set of policies?
Well, I think the politicians could, because free markets lead to thinking, and thinking is the eternal enemy of all politicians everywhere, particularly right now in the United States as they try to redo the tax code.
But, Craig, there is still hope, isn't there, that, I mean, as the labour market globally tightens, that these earnings are eventually going to feed through into wages and make this sustainable.
If they were going, no, listen, if the government of the United States wanted to apply that money to growth, they would have put it into the tax code. We'll give you these deductions if you, by law, put this money here to develop jobs here or there. What do they do instead? They're letting corporations deduct the expenses incurred to move jobs outside of the United States. The instruction manual by Adam Smith says, don't do that. If you do, you're going to get in a lot of trouble.
Talking about what the European Union is doing, interestingly, we've just been talking about how they're cracking down on tax havens. Is this going to help, do you think, Craig, in reversing this situation?
No, I think the tax haven decision by the EU is a lot of showboating. I don't think it's going to change anything. Certainly not within the next 4 quarters. As our guest said correctly, what happens to these countries such as Luxembourg when they lose this tax haven status? The U.S. Virgin Islands, the state of Delaware, the country of Bahrain, which has been named a tax haven. This is a name and shame operation that we're seeing now, except I think these countries and the people who run these operations see this as a good advertisement for their services, except for Panama, of course.
OK, Craig Kapitas in Paris, thank you very much indeed.